Okay, moving on here on FairBinaryOptions.com with the second part on the wedges, and we would like to treat this wedge, this rising wedge on the euro and Great Britain pound. And this rising wedge basically starts from the downside from here. From here and goes to the upside like that, and we are looking for a five-way structure. Now a rising wedge basically goes in five-way structure. I would say that this would be the first wave, but then you don't have to count the wave. What you will actually need to do is to try to place your 1 to 3 and 2 to 4 trend line. So this is the 1 to 3 trend line like this, and you just project it forward. And the 2 to 4 trend line, which is the most important one, as this is the rising wedge. So 1, 2 around here like this, okay. And as you can see, this has the shape of a wedge. This is what you're looking for. This is the wedge you want to trade, and this is the most important trend line, 2 to 4. Now the first wave most likely to be ended around here. The 2 to 4 trend line needs to be clean, needs to be let's say not to be pierced or broken by any parts of the other waves. So 1, 2, and then the third wave to the upside. Of course we'll have the fourth wave here, and the fifth wave, and the fifth wave to the upside. 1, 2, 3, 4, 5, and therefore this is a rising wedge. What did we say on the previous recording? Well, we said that this or such a wedge is falling, so you wait, so you're looking for price to go to the downside. If you're looking for price to go to the downside, then you will look to buy put options. Now buying put options on a retest, but attention, the retest of the trend line of the 2 to 4 trend line, by the time it is broken, the retest is not mandatory. So it may end up that price will actually break to the downside, and you are just waiting for the retest to find a better place to enter your put options, but actually price is not retesting that area. However, you can incorporate the time element in your analysis. What would be the expiration date? Well, there is a strong tendency for any wedge, be it rising wedge or falling wedge, to retrace to the 50% level based on the whole wedge in less than the time taken for the whole wedge to form. So it depends very much on the time frame that the wedge is being identified. For example, this is a 1 hour chart, so the wedge starts from here and ends here to the upside. What you need to do is to go and take a Fibonacci retracement tool, Fibonacci retracement from the highs to the lows here, and you look for the 50% retracement, and you just take a line and you mark the 50% retracement. Then you delete the Fibonacci from here, not to let's say disturb you, and that would be your target to the downside. That would be the moment, or that would be where price is attracted to go. Now what would be the expiration date? So based on this 1 hour chart, it should reach the 50% trend line or the 50% retracement in less than the time taken for the whole wedge to form. So you take two vertical lines from the beginning of the wedge till the end of the wedge. You measure the time element, so you take then another trend line and you measure the time element from here to here. You copy it, you put it on the right side, and that would be the time or the expiration date, or the 50% retracement should be reached in less than this time. If this time expires here, and price is not going to reach the 50% trend line, it means this is not a wedge. Remember, these are considered to be in most of the cases reversal patterns. So if price reverses here, that would be the thing to consider. So you'll have the expiration date based on the time element on the vertical line. This is the 1st of January 2014, for example, and the expiration date should have been traded starting with this area here. It was the 18th of December. So I'm talking about something like 1.5 weeks. Or the majority of brokers will offer you end of week expiration date, or even end of month expiration date that you can trade. And as you can see, the 50% level has been reached. Basically, from that moment on, either with end of day, or with end of week, or with end of month, this wedge was going only to the downside. So this is how you are incorporating trading. This is how you are incorporating the time element in your analysis whenever you are trading, binary options, and of course whenever you are trading wedges. In our case, we just gave you the example with the rising wedge on the euro, Great Britain pound. The same principle is valid on a falling wedge, but there you are looking to buy call options by the time the 2 to 4 trend line is broken and retesting. Again, with the same target, 50% retracement, okay, 50% retracement in less than the time taken for the whole wedge to form. Thank you for being here. This project will be uploaded on the official YouTube channel on fairbinaryoptions.com. Will be uploaded on the website, as it is being part of the Binary Options Academy project that we're having, and I hope you find this useful. Any questions or comments, just be sure that you are posting them on the YouTube, on the comments field, or you're just sending us some emails. Bye bye.